Oh, did I turn my mic on? Can you hear me?
We can. Yeah, good to see you.
Good to see you. And how are you guys?
We're doing great. We're just continuing to plug along and try to figure all this out. We keep getting more information every day.
I know we're spending a lot of time trying to figure this out. I feel like I just need to get back to doing things.
Yeah, I hear you.
I've had, I was on a knock webinar earlier and found out it was all about the more the medical side, hospice, home health, and everything else, and their funding that they got because, like, one of my hospice friends, they had a $400,000 check just show up in their, or deposit show up in their account because CMS had all their history and they knew what the volume they did and so on and so forth. So they just started distributing based off their size.
Oh, is that right? So they just put some money in there.
Just put money in, which they're accountable for. It's supposed to, well, Tom's on, he might know more than I do because he's probably got some of it.
He's still getting connected audio-wise. David Dickey, I see you're on here. How are you?
I'm good, Stephen. Thank you. How are you?
I'm good. Glad you're on. And I got your note. And when we get to that point, I'll ask you to come and tell us a little bit more about the workers' comp issue that you raised.
Sure.
Good. Thank you. Appreciate that. And Tom's on. Tom, thank you for sending that link with the article from Forbes. That was great.
With a bunch of CPAs, in the home health care side, the CARES Act gave some extra money for Medicare. Well, now they're realizing there's probably some more strings attached as far as some kind of cost accounting. So I just listened to an hour and a half of CPAs talking about spreadsheets and all this accounting. I'm going to have to go back and re-listen to it because it's much more complicated than what I initially thought it was going to be.
Well, that's what Dave Rogers was saying. He said, so that CMS just sort of deposited some money in your account?
So it's called the CARES Act Emergency Fund, and basically they basically dropped in 6% of what your net Medicare revenue was for 2019.
Oh, okay.
And basically said that, so the question is, it's like how much expense do you have to show to not have to pay it back or have some kind of accounting consequence to that. And then they're actually just starting round two, and round two is a whole different calculation of what you should receive. And so now there's some confusion on if distribution one was different than distribution two. Is that in addition to or take back from what you currently were paid? So kind of like the PPP, there's just a lot of unanswered questions. So bottom line is at the end, there's gonna have to be some kind of accounting. So these guys are just getting busy because you have to actually send in a quarterly accounting. So they're just busy putting together, again, if you don't track your expenses very well and you have to go back later and do that, it ends up being more problematic. So
Tom, I was on that and I bailed because I realized it wasn't applicable to us. But for medical, it's basically you have to account for decrease in revenue and PPE supplies or other expenses related to this crisis. Is that correct?
Yes. So it's only Medicare based though, right?
Right.
Yeah.
But let's say you get 100,000, you got to prove that you spent that 100,000 on decrease hour revenue, PPE supplies, or other related expenses to the.
Yeah, and it would be like less therapist working. And then I don't know, the whole other thing is you got, for me and a number of my employees, we're not spending time working on generating revenue and dealing with patients. We're dealing with policy and procedure, listening to Littler and all that stuff. So I don't know how much of that can be allocated to that's all related to COVID, not related to patient care. So I need to go back and see how much of that we can allocate. But what makes it more complicated in the current program, if you do get a PPP, you can't allocate those costs currently if you are using them as your PPP loan expenses. So it just gets more complicated.
Right, Sam. Okay, well, we're coming a few minutes past the top of the hour. It looks like we've got a pretty good group on here today. And so I'm going to kick this off with a welcome to office hours for April the 30th, 2020, where we look at how home care companies are coping with COVID-19. And some of the issues that we've been talking about the last couple of weeks, and we have new updated information. We've talked a little bit about personal protective equipment, and 2 weeks ago everybody was scrambling. It seems now that there's more equipment available, but if you've not been to the Home Care Association of America website, hcaoa.org, in their coronavirus updates page, there are some new vendors of PPE, and these have been vetted by key members of the association. So hopefully these will be good sources. Also, after our last call, Renee Rand, who's on with us, had sent me a link to some other vendors, and so we'll get that information out to you as well. I apologize, I put the link email in a safe place. It was so safe I couldn't find it today when I went to look at it. I'm sure you've all had that happen. But thank you, Renee, for sending that on. We also talked a little bit last week about policies and procedures for protecting clients and caregivers, and we mentioned that HCAOA and Littler and a working group of companies had put together these recommended operational protocols, and there is some information in there about caring for clients with COVID positive and the precautions and so on that you need to take. And I also had a very lengthy telephone conversation last evening with Vicki Hope from the Home Care Association of America, who reached out and asked me to put together a panel of people to do some webinars for agencies that are willing and able to care for COVID clients, and to encourage more agencies to do that. More information will be coming out that in the next couple of days as we put those details together. So we'll work at keeping you updated on policies and procedures for making sure you protect your clients and your caregivers. One of the hot topics this last week with our mastermind calls has been caregiver recruiting and retention, and it's a hot topic for a number of reasons. But one of the things that came out in the last 2 days, and we'll be talking a little bit more about the Paycheck Protection Program in a moment, but one of the concerns that a number of agency owners and leaders have expressed to us is what happens if the new unemployment rules make it more lucrative for a caregiver to stay home than to work. And if your head count goes down, what impact will that have on the forgiveness of the Paycheck Protection Program money that you received? And obviously, one of the ways to keep your head count up is to continue to recruit and onboard new caregivers. And we had several lengthy conversations this week from different groups about the things that they are doing to recruit caregivers. And obviously your online digital recruiting, whether it's Indeed.com or MyCNA Jobs or your own website, are things that are important and to go out there. And we had some conversation about the language in your job ads. And are you updating the language? Are you updating the headlines? Are you making your job ads more attractive to people caring for jobs? We've also seen an interesting almost dichotomy across the country. In some areas of the country, we're seeing a lot more applicants for recruiting ads in home care, as people in other walks of life or other work who have been laid off or aren't working are now seeing the job ads and applying for caregiver recruiting positions. And then on the other parts of the country, we're seeing where the number of applicants has gone down quite dramatically. And those are in areas where the unemployment pay is higher than people can make by working at the standard rates. And so they're not seeing as many people applying for new positions. So we're going to continue to stay on top of that and provide insights into caregiver recruiting and retention. The other conversation we had this week was around really beefing up your employee referral program for caregivers, because again, all of our data over the years shows that the best source of quality caregivers is other employees. And we've done some research and have some data that show that the caregivers who are hired through your employee referral program tend to last longer. And this week I was on a webinar actually coming out of London, England, with a friend and colleague of ours, Neil Eastwood. And Neil was actually on Office Hours a couple of weeks ago and shared some insight, but Neil just released some new research that he has done on caregiver recruiting in the United Kingdom. And he had a graph that showed caregiver retention starting at day one of hire and then going out 30, 60, and 90 days. And he, in the graph, showed the turnover rates for caregivers coming from online job boards compared to turnover rates for caregivers coming from employee referral programs. And there was a huge difference in the retention rates, which again reinforced the things that we've been saying about beefing up your employee referral program around caregiver recruiting, looking at how you're communicating that to your employees, how you're messaging that to your employees, and the incentive bonuses that you're paying out both to the current employee, and we're seeing a trend of more signing bonuses for the new employee. So I encourage you to take a look at that and keep up your recruiting program. We've had numerous conversations over the last 3 or 4 weeks around the Family First Coronavirus Recovery Act, and particularly the emergency paid sick leave and the emergency paid family leave. And as you know, the industry put a great deal of effort into receiving an exemption from the requirements of this law. And then with the lawsuit in New York State, it sort of upended the advantages of having the exemption. And so this week, what we're seeing is more and more companies have chosen to waive the exemption and to, in fact, follow this act and provide the emergency paid sick leave and the emergency paid family leave, and to take the tax credits that go along for supporting that. And again, there's a lot more uncertainty this week about the exemption from that and whether it makes sense for companies to take the exemption. So as I said a moment ago, more and more companies are moving toward waiving the exemption and in fact offering the paid sick leave and the family leave. And of course, the Paycheck Protection Plan, and there's been a lot of new information out this week about the Paycheck Protection Plan. There was another round of funding. Haven't heard anything today, but I suspect that if you've not already applied with your local bank, you may have missed the opportunity for the second round of funding. One of the things that came out very clearly in both the first round and the second round is that companies that had a relationship with a smaller local or regional bank seemed to get their paperwork processed much more quickly and get their money deposited much more quickly. The companies that had relationships with large banks, Bank of America, Wells Fargo, I think Citi, Chase, the big national banks got bogged down with applications, and many people still haven't gotten funded. We actually had one member who has a banking relationship with Chase, and it wasn't going anywhere, so they went to another bank, did the application, got funded, got the money. The other thing that we're hearing more about today, and I'm going to get some input from some of you who are on the call, because I know you've been watching this as well, is what are the things that are going to be taken into account for the forgiveness of these loans. And I'm going to stop sharing when I come back and talk to that. And I guess we'll start at the back and go forward, looking at the PPE. And Tom Glatt from Phoenix sent us an article a couple days ago. Tom, you want to comment on what was in that article in Forbes and what you took from that, and how you're applying that to your forgiveness of the PPE? And you're muted. You're gonna have to click on your unmute button. There you go.
Yeah. Well, I over the last couple of weeks, I've been doing some some Zoom with our staff out in the field. So I feel I'm a lot more sophisticated. So I realize now all I have to do is hold down my space bar, and I can talk to you. And then I release my space bar, and I'm back on mute. So that's a good one for others to know. So I guess, yeah. The takeaway, I think, for me is I'll share another comment that my CPA actually sent that to me, and I've told him I've been kind of PPP fatigued because I was fortunate enough to not panic about not getting the PPP loan because I did receive it. So I haven't been spending a whole lot of time perusing, the internet. I think one comment in another article basically said is, he's advising his people to freeze on spending any PPP until you know what is going to be forgiven. The worst case scenario is that you think you're going to have all this money to give away. You give it away to your employees, and then you find that you don't really get as much forgiven as you thought. So there's some different thoughts. That article that I shared with you in Forbes and with a few others, I read through that, and to me that's just, for me, my mind has got so many things going on to try to remember every one of those. It's kind of like, I'm just going to have to wait until more documentation comes out. And on the conference call this morning with Angelo, it sounds like it's going to still be another 5 to 10 days before we even get any information. And unfortunately for me, I'm going to be into it almost really 2 weeks, 3 weeks into this program, and have until the middle of May before it's all April and middle of June, and then it's going to be done. So I guess at the end of the day, I don't really have a whole lot of comments about the Forbes article, besides there's just a ton of things that are just not very clear right now.
Well, you're exactly right. And it is pretty clear that if you spend 75% of the money on payroll related issues, and in that article and in the provisions of the law, it spells out fairly clearly the payroll pieces of it. Then we have the pieces that relate to other accepted expenditures for the 25%, interest on mortgages, rent, utilities, and actually in that article it listed a lot of the things that are included under utilities: your telephone, your electricity, your internet. It also included transportation in there, and I have to look more closely to figure out what all is included in that transportation. Is it transportation getting your caregivers to their clients, or I'm not sure. So we need to dig that one out a little bit more clearly. The other thing that's come out of our conversations this week is that it seems to be that the approval process for forgiveness is going to happen between you and your bank, and that the SBA will have guidelines for the banks, but that the bank will be the one making the determination of how much of the loan is forgiven. And they're uncertain about that, so they're waiting for more guidance. And I had one of our members yesterday who was adamant, his bank was adamant with him that they didn't know anything about it, and he had to go to the SBA. So there are obviously lots of mixed messages coming out of that. So we're expecting guidance from the SBA in the next week to 10 days, and so we'll know more about that. One of the big question marks,
Stephen,
yeah, go ahead, Tom.
I was going to tell you that the other part to that is that the banks have 15 days after you send them the information to reconcile. So I texted Dave Rogers this morning, and I said, hey, let me know when you send in yours to Chase, along with those other 500,000 people that got their PPP loan, Bet I hope they have no time to reconcile anything, because 15 days is going to be a massive undertaking for them.
Yeah, you're exactly right. Yeah. Yeah. Yes, I think there's still a lot of uncertainty. And the indication that I'm getting from people that I'm talking to is that these banks are probably going to look at big picture issues. I know people were concerned about going back and looking at reconciling individual employees. But I think they're going to be looking at, there are some specific references in there to headcount. There's specific references in there to reduction of compensation for employees. And so I think that's why we go back to the recruiting thing that we talked about a moment ago, which is to keep your recruiting efforts going so that you continue to keep your headcount. So if you have caregivers who choose to go on unemployment rather than work, your total headcount's not going to be down from where it was in those two 8-week comparison periods back in 2019. Does anybody else have any comments or observations about the Paycheck Protection Program that they'd like to add? Yeah, go ahead, Mark.
The question I've had is because I've lost number of employees, but my hours have increased, so I've been covering a lot of it with overtime. And so the question I had was whether overtime somehow works into the FTE, the full-time equivalent calculation. I asked my business advisor / accountant to look into that, and he said, essentially, no, you're better off having, 2 part-time people covering those overtime. I mean, it's obvious that financially you're better off having 2 part-time people cover the overtime, but he said essentially the overtime won't get factored in. So
yeah, well, the formula that I saw today from a banker was that they're using 30 hours a week as full-time. So theoretically, and again, I'm just based on what I saw today, if you have one caregiver who's working 60 hours and you divide it by 30, theoretically that's 2 FTEs. Now, whether or not that will hold up when you get back to actual headcount is something to be seen in the future.
Yeah, I hope they flesh that out, because my guy said he didn't think it worked that way.
Okay, and that may very well be. Going back to the expenditure, clearly the overtime expenditure is included in that 75% of the PPE number. And also there was conversation in the last couple of days about, can you offer your employees incentive bonuses to, again, make up for some of those dollars? And the early indication is that yes. And there were several conversations around sort of doing that retroactively. Is that getting to the end of the 8-week period and looking back and saying, okay, I'm going to give all my caregivers who work the equivalent of another $1 an hour. We've seen a number of our mastermind members who have already raised their hourly rates, and in some who already raised their hourly billing rates to their clients. We're seeing a lot of folks who have added a surcharge onto their invoice to cover personal protective equipment. So there are a number of things like that are happening, affecting bill rates and pay rates. But this headcount number is the one that has a lot of people concerned. And so again, I think that beefing up our recruiting efforts and our onboarding process and get those people hired and get them out there and get them to work, so that, again, back to your question, Mark, if you have the headcount and you have the hours and you do the division, that's how you're going to get your FTE numbers. So
I can give you a little feedback too. So Mark, from what I understand of the program, there's 2 things. There's number one is the overall wages. They discussed this morning. It's not going to be like, hey, one employee earns $3,000 and they had a decrease, so you're penalized on that individual employee. Supposedly what they're saying is it's going to be the overall payroll, and that the overall payroll change, which if that is true, that'll certainly be a lot easier to manage. The second part is, as far as, Stephen, you talked about that 30-hour employee. I remember when I had to do calculations before about stuff where if we were exempt on what was your total head count. If I recall, if it's 30 hours or more, that's considered a employee that that is considered a full-time equivalent. And then what we did in the past is took everybody else that was under 30 and took them in a bucket and then divided that by 30, and that came up with your other number. So kind of the FTE 30 hours or more were pulled off. So in your situation, I don't know if a 60-hour employee would be counting as 2 or not. It could, but you know that final number has not been out there.
Right.
Thank you.
Yeah. Okay, good. Thank you. Thank you. The other thing we talked about was participating in the Family Leave Act and how we account for paid sick time and employees who are on family leave. And David Dickey is with us from the Solutions Group in Texas, our insurance provider. And David sent me a note the other day talking about having a way to make sure you're tracking people who are paid but not working. David, do you want to jump in and tell us a little bit more about that and how you see that coming into play?
Sure. In maybe the most sensible thing to come out of the insurance regulatory apparatus in several decades, they have decided a new class code for workers' comp, 0012, which is paid but idle. And so you want to have a way of tracking the pay that goes to employees for which they are not actually providing a service for anyone. And it is essentially a free workers' comp class code.
And so if those workers that are on paid sick time or paid leave are classified as paid but idle, that's going to reduce your workers' comp premium. Is that my understanding?
Correct. So your percentage that you pay in workers' comp will not be applied to that payroll.
Okay.
But you have to be able to show it as a separate classification in your payroll records.
Okay. So then
what about vacation? What about this holiday pay, vacation pay? They're not working and they get paid.
Yeah, so as it sits now, if it is a regular employee and they're being paid holiday time or vacation time, that's still compensable under workers' comp. It's only paid but idle. And also on-call, like on-call time for a nurse can't be put into paid but idle either. It's just strictly folks that are being paid to not work because we're getting money from PPP.
Okay, good point. Thank you, David. The other question I have for you, David, as I was thinking about this, we were thinking about policies and procedures and providing care for clients that test positive for COVID. I'm going to take a chance and toss you this question. I don't know if you have an answer at the tip of your tongue, but what's your sense of the liability consequences for that, David? And is that covered under most agencies' liability insurance?
So if your liability insurance did not include a pandemic exclusion on it, it will at the next renewal. So the insurance companies have put on that exclusion at a rapid rate. So I suspect that there's not going to be coverage on a liability policy very soon for anything related to COVID. Where you might find coverage is if the standard of care is broken because of staffing issues or some workaround to some sort of coverage. We all know that people with COVID need home care. Home is a great place for someone who has COVID. So I don't see that there's going to be a huge amount of litigation as a result of a home care agency stepping out and providing care for the people that need to have care. Maybe I'm hopelessly optimistic.
Well, and I think we're all optimistic around that. However, the lawyers are always causing us to use caution and try to avoid litigation. One of the things that's come out in the last week is conversation both at the state level and the federal level to pass legislation providing immunity for healthcare workers. And in many states, hospital and nursing home workers are already immune from civil liability. However, home health and home care are not always included. The Home Care Association of America and the National Association for Home Care and Hospice have put together a joint letter to federal legislators for the next round of legislation related to COVID, asking for immunity for home care workers from civil liability. We'll see if that passes, if it gets into the bill, and what comes out of that. But we're going to watch that, and when they let us know what is in the request and how we can do that, we'll reach out to our legislators and ask them to make sure that that immunity is in the bill that gets passed. So we'll reach out to you and let you know. I know that when this thing first came about and the industry was looking at exemption from the Family Leave Act, home care leaders across the country rallied. They went to those websites, they got those messages out to legislators and regulators, and the consensus was that that worked and that home care companies are exempt. Of course, now many of us are waiving the exemption because of the other complications. But I think it illustrates the value of engaging in the process of influencing legislation and regulation and being involved in your state and your national association.
Stephen, one of the competitors in my market, a major franchisee, is having people sign what she called a COVID waiver. I'm assuming this is something that she got from their corporate office that asks clients to waive any right of action against her caregivers.
I had heard that as well from one of my clients, and I thought about it and said, well, okay, that's nice, but is it going to matter? But then in the conversation with Littler, and a week ago, we were on the webinar with Littler, and they were describing their package of policies and procedures. And they actually have two bundles. One is a home care employment bundle, and then the other is policies and procedures specifically for COVID, and they bundled them together and made them a package. And we reached out to them to see if we could work out a deal to get some discounts for our mastermind members and our clients on that package. And in that package, there is a sample of a form both for caregivers and for clients, acknowledging the realities with COVID and I don't know the specific language and details of it. So Mark, I think to your point, there may be a form out there that makes sense. And as I'm understanding some of this class action litigation, some of the defense has to do with, did I do the right thing based on what I knew at the time and the legal advice I got at the time? And so if having a form that says, we acknowledge that this is a hazardous situation and you acknowledge that, will that help? I don't know, but it certainly can't hurt to have more pieces in the puzzle to help defend against any potential litigation. And again, the big fear from an employee perspective is not the individual employee, but it's a class action. And already the attorneys doing class action lawsuits are circling overhead waiting for an opportunity. So we'll continue.
Hey, Stephen?
Yeah, Dale, go ahead.
I finally bought the toolkit.
Oh, you did? Okay.
Scare tactics work, I guess.
Okay.
But I did read the caregiver waiver form. Now the clients is pretty much, I would say, in your face. You could get this and you're not going to sue me. The care one's a little softer because it does say, you have recourse, but only to workers' compensation insurance.
Yes.
that you waive any right to file a lawsuit against us, but basically it says you're more than welcome if you're infected to file a workers' comp claim, and then the comp carrier can figure out if it's truly work related and how they slice and dice it, I don't know. But it's a pretty good form, and I'm seriously considering about pairing it with some other policies, maybe the arbitration deal, and rolling that one out.
I can give you
Yes.
some insight too, if you guys want. We have the toolkit also, and we thought that with the client, it was very onerous. So we basically just made it more of a notice. We changed it from a kind of a please don't sue us to a notice that if you're out, there's some assumed risk, and if you do not want us to take care of you in the future, please let us know. So we're giving the client the option. No, the only client that has returned the form is a retired attorney. So I thought that was pretty funny. The second thing for the employee, we actually just sent this out today, and we basically are turning that into a notice. I also took out the workman's comp thing. So I just don't want the employees to think of all the reasons of how they can have recourse against the company. I mean, no doubt, and maybe this is a question for Mr. Dickey, that we took out the workman's comp thing, but we also put in there, if you feel at any time you don't have enough protective equipment, or you feel you need more training, it is upon you to let us know. That way it's putting them on notice that we want to do the best we can, but we can't read everybody's minds, and we don't feel that we're going to know exactly if you don't feel you have enough training, so that we feel that this is a better one than waiving all obligations so they can't sue Nightingale, its directors, its owners, et cetera, because any good attorney could still sue us.
Yeah, good point, Tom. Thank you. David Dickey, do you want to comment on that, the question about workers' comp, and is it a work-related illness?
Yeah, if it is a work-related illness, almost assuredly your workers' comp would respond to that and provide all the typical workers' comp benefits in your state. There's just no way that they can squirm out of paying those claims, other than if they can prove that it was not contracted at work, that it was much, much more likely to have been contracted someplace else. But my recommendation would be to turn those over to your workers' comp carriers and let them fight the battle of making that determination. The last thing you want to do is say, well, it doesn't look like it was at work, not file that claim. Then you get sued twice.
Yeah.
So are you suggesting then, Dave, that everybody that gets COVID positive to go ahead and run it through workman's comp?
If they were working for you and are making an allegation that it was contracted on the job, then absolutely.
Because the other challenge is we're paying that 2-week sick time and under the PPP, and that technically would not be allowed if they are having a workman's comp claim, and if it truly the workman's comp carrier identifies that it is a true workman's comp claim, which probably, maybe you could answer this, it probably won't be decided right away that it's accepted, or how long does it take for that to get accepted?
It's going to depend very dramatically based on who your insurer is and how overwhelmed they are with claims. So certainly it's not going to be, file a claim today and have your determination tomorrow, and then their disability pay starts on the day after. It'd be 7 days, 14 days, something like that.
So if I'm hearing you correctly, David, if an employee gets sick and they're off on the paid sick leave, then they need to be off for the additional 2 weeks. They take the family leave, and then their workers' comp would kick in at the end of that period?
Well, workers' comp will kick in at various times depending on the state for any on-the-job injury or sickness. The question is, how quickly will the insurance company determine that that is an on-the-job sickness? Mm-hmm. And that will depend.
Okay.
Well, the challenge too, Stephen, is like, in New York, when the hospital people have been infected, and I haven't read the latest data, But they said most of the time when they went back to contact tracing, these people weren't infected at work. They were affected by other family members. And I know now at Nightingale, everybody's wearing a mask. So if you have a mask on, according to CDC, you have a very low incidence of actually getting it, of COVID. So it's going to be, I'm sure, very difficult for these carriers all of a sudden now to try to do determination if it is or not.
Very good. Very good. Well, a lot for us to be thinking about. Hope this information is helpful. Are there any other questions, comments that anyone has about any of the issues that we've talked about this afternoon? Or are there any other things that you're dealing with that you'd like to ask about or talk about?
I have something else to share that just came up, Stephen. In Arizona, I don't know if this is going to apply to non-medical companies, but as you know, there's a company nationwide, and I want to say it's like Bastille or something like that. I have the email here somewhere, but they are contracted to do to disinfect your N95s, and if you disinfect them, you can return them back to the company like Nightingale. So if you have N95s, the Department of Health Services in Arizona just announced yesterday that if you sign up with them, they will allow you to take your used N95s. So let's say you use them for a patient. They will allow you to take them, send them overnight to this group. This group will disinfect them and return them back to you. And you have to mark them and stuff like that, so you know what employee had them. But the net benefit of that is that you're just not burning through all your N95s. So they offered that to the Department of Health Services. So I know that went to, I'm assuming, home care and Medicare and probably hospital companies, home health and hospice, and probably hospitals. I just don't know if it's that's protection is available to the Arizona non-medical group or other non-medical, and that will be the next thing we can probably check as an association.
Good question. I had not heard that the N95s could be sanitized and reused. That's good information to look into.
We did get the email, Tom.
Say again, Dave.
I said we did get the email. Same thing.
Oh, okay.
And I love the spacebar feature. Thank you, Tom. You made the day again.
It's amazing what you can learn by coming onto our Zoom meetings, right? The other thing that came up in the last week with regard to the N95 masks is the awareness that if you are allowing your caregivers to voluntarily wear the N95 mask, there is an OSHA form, Part D, that you need to advise them about the hazards of the N95 and make sure they're using it properly. If you are requiring the N95, there's a whole nother set of regulations under OSHA with regard to training your employees about the use of the N95 and also about some method of screening them for respiratory issues that might pose a threat to them. And there was actually a case I read about earlier this week of a person who suffocated wearing an N95 mask because they had some respiratory issues. They weren't aware of it. And of course, the N95 protects you from particles coming in, and it also limits oxygen coming in, and this person passed out and had an issue, I think died wearing the N95 mask. So if you're not familiar with that, I would encourage you to look at the OSHA regulation if in fact you're requiring your employees to wear N95s and other protective equipment, because there's some OSHA regs around that. Any other observations, comments, questions about anything at all that we've talked about today?
Hey, Stephen, what was the name of that form you said from OSHA?
I know that the one for voluntary use of the N95 is a Part D form. I don't know the specific requirements, Corey, so you'd have to Google that. Um, I'll see if I can dig that information up and put it out to everybody who participated. But I think you can Google or go into OSHA to their website and do a search on OSHA regulations for N95 and other protective, personal protective equipment.
Awesome. Thank you so much.
You're welcome. You're welcome. Any other thoughts, comments, questions this afternoon? All right. Well, it's great to be with you. Thanks for being here. We've got a couple things in the chat box. Let me just check and see what's in there. Oh, the question was for Dale. Dale, do you mind sharing with us the cost of the toolkit? Is Dale still on? Oh, Dale's walked away from his desk. The retail price of the toolkit from Littler, the price of the COVID toolkit is $2,500. The price of the home care employer toolkit is also $2,500. They've bundled those together and they're offering them as a package for $4,000. We've been working to try to get a discount for our members. Several people told me they negotiated their own discounts. So it sounds like the price is flexible, but the list price is $2,500 for each of the two packages or $4,000 for the bundle. Any other questions, comments, observations this afternoon?
I just saved myself another $1,000, guys, because I paid $2,500 both. I guess I'm not a good negotiator.
Oh, okay.
Thank you, Stephen. Appreciate your doing this.
All right. Thanks, Mark. It's good to see you again. Thanks, Tom. Thanks, Dave, Dale, everybody, all of you who are on. I hope this was useful and helpful. David Dickey, thank you for being with us and giving us your insights about workers' comp and liability. We'll be on next Thursday at 4 p.m. Eastern Time for office hours. If there's anything that we can do between now and then to support you, please let us know, and we'll talk to you then. Thanks, everybody. Have a great weekend. Be safe. Talk to you later.
Interesting.